Hello everyone, welcome back to the Market Chat. My name is Richard Moglen, and joining me today is Oliver Kell, the U.S. Investing Champion of 2020. We're going to cover a lot today in this interview, from his trading background all the way up to his current approach to the market. Oliver, thanks so much for being here. Welcome to the show.
Yeah, thanks for having me, Richard. Happy to be here.
Awesome. So I always like to start off with learning more about how you got interested in the first place in the stock market. So could you tell us a little bit about your background and how you got interested and more involved with investing and trading?
Yeah, so my background, my dad was a market maker on the Pacific Exchange. So I grew up in the Bay Area, and, going into the market closed at 1. So if we had a half day at school or something, we would head in there. And then just, we're pretty tight. So just constantly talking to him about the market over the years. As far as when I officially started actually kind of, trading, if you will, I'd bought some stocks throughout college, but, it was more just one of my best trades ever. Actually, in 2008, I said they're not going to let the Bank of America out of business. And I bought it, didn't even look at it for a couple of years. And then, it was a great trade, but there was nothing formal. But probably around my senior year, I was kind of like, all right, I got to do something. What am I going to do? I've been in college, I've been studying all that stuff. And I really started bearing down and getting into trading. I did an independent study, actually. I was kind of like a war major, and I compared something called the template of Mars to, the ideal trader. And so I wrote an independent study on that, and it caused me to just do a ton more research. My dad was still actively trading at the time. So just, it was like a way for us to just have something to talk about. And then is what I did right after college is I went to, what I would kind of consider to be a modern day bucket shop, where I went to one of these places where you put up like $5,000 and, they give you 300,000 in buying power. And it's really, it's not what I would recommend. But it's what we did is we trade strictly off the level 2. So we didn't even really use charts. Mm-hmm. If we had, I would have had a lot more success, but I just didn't know enough yet. So we would look for big bids and offers and stocks. And, let's say you had like a $300,000 bid in Visa or something, you might buy it, versus that bid. And sometimes it trades off that bid, and, you take a couple, 20, 30 cents out of it and just keep doing it until that bid prints. Mm-hmm. And sometimes you might flip the other way on that bid. So we were pretty much trading against the level 2. I learned a lot about things that, I don't use a ton today, like refreshing buyers and sellers, things like that. So I did that for about 6 months. I really didn't make any money. I didn't lose too much either. I think it was just, it was a good way to get started. And then I got a job at a hedge fund in Stanford. Really, it was just prop. It was some guys that had been at First New York Securities that kind of went out on their own. So they did international arbitrage. So I was basically like a junior trader, an assistant. I had 2 mentors that I would trade their stuff at night. I might trade like the Japan Open or Japan Close, London Open, stuff like that. But it was more like arbitrage. So it was more reversion to the mean type stuff. Hedging your currency exposure. We traded a lot of news core between Australia and the U.S. Crazy trades you probably know nothing about, like Rio. We would trade between London, Australia, and the U.S., and it's not convertible between London and the U.S. So you'd have a sub market, all types of crazy trades. I had mixed results doing that stuff in reality. And then I found this guy on Twitter, Trader Florida. I think he's got a service now, but he had a big following back in the day, and I learned a lot from him. I really started learning about chart patterns, price action, volume. And, by the end of my time at that fund, I had really started to make some money. Unfortunately, in the 2011 taper tantrum, I happened to actually be short the market, and on my best day ever, we went out of business. So that sucked, but a lot of the stuff I learned from Trader Florida are really the root of kind of what I do today. So kind of via meeting him, I found chartpattern.com, and then I found JT from Tickermonkey in there. And, I've been at Tickermonkey for like 7 or 8 years now, and have just picked up tips and tricks over the years from, there's been a lot of great traders that have been through there. I've been able to learn from. So I just try to soak up everything I can. And at the end of the day, I think the best advice I ever got was, you have to trade. Like, you literally have to trade. You got to get into the market. You got to start making mistakes, because you're going to make a ton of them. And then you kind of start to learn yourself. And I think over time, you start to get better. So from there, I went and I worked at an institutional brokerage. So we traded for like big funds on the execution side of things. I learned really how to buy stock. I'm talking buying a couple 100,000 shares of a stock every single day for 3 months, stuff like that. And you really start to learn, how the algorithms work, how VWAPs work. When a stock really sells off and it's way below the VWAP, that execution trader is trying to print some shares to kind of get ahead of that VWAP, stuff like that. I was literally doing that. The downside for me there, I had a pretty good run in my accounts then, but it became a lot more difficult for me to trade. They made a lot more rules, and eventually I moved on from there and sold mutual funds. Kind of same deal. It was almost kind of like the wave was hitting Wall Street, where they hit those execution firms first with a lot of the compliance. I was good for a year or two selling mutual funds, and then kind of same deal again. I started getting hit with the 30, 60, 90-day hold type stuff, which made it a lot harder for me to trade. So I met my wife, and we moved to Philly, because this is where she's from. And I really wanted to get into tech, like literally specifically to get out of finance. And, I started being able to trade, legitimately, kind of how I like to do things, probably about 3 years ago. And, I've been pretty consistent that whole time. And then, this year was, I entered the championship because I told my wife, I said, hey, I really think I can win this thing, and she was all for it, whatever. And then, but I certainly didn't expect to do what I did. I'd be lying if I said I did.
Absolutely.
So, kind of my background. Yeah.
Cool. Yeah. It was the perfect storm. This year was a great year for trading, especially kind of our style. I want to ask you, because I think it's always interesting to see what kind of books help people along the way. So what are some titles that you think people starting out who really want to get serious with this should dive into?
Sure. So, one thing I would say is everybody has their own style. I would say I am definitely like a total price action guy. Like I find the stocks I want via their theme, their story, their earnings and their sales. But a lot of the times I find that, via big volume, I'll find big volume and then I'll dive a little deeper on the stock, and it's like, oh, their earnings are great or their sales are great. So I consider myself like a true tape reader, if you will, so I love Livermore. Like I love Reminiscences. I think How to Trade in Stocks might actually be one of my favorite books. I know people love Reminiscences because it's a great story and it's phenomenal. But How to Trade in Stocks is really great. I love Darvas because I think at the end of the day, we really overcomplicate what we're doing, and this has a great way of simplifying things. So like, my little brothers got into trading, and a lot of my friends have kind of got into it this year. And that's actually the book I tell them to read. People want to buy stocks, make a new low. Like a lot of my buddies will say, oh, it's got X amount of room till its new high. And I'll say, yeah, that's exactly why I don't want to touch it. And and you give them Darvas, and it's, it lays it out simply. Some guy on the other side of the world is crushing it, and it's because he's buying stocks making new highs. So those, and then How to Make Money in Stocks. That's really, combined with Trader Florida, kind of the book that really built my foundation. My mom gave me a really old copy of How to Make Money in Stocks, and I honestly didn't read it for a long time because it's got the 1999 on the front, and you're thinking like, what is this? I'm all about RSI and every indicator known to man. I got a million things on my charts. And then finally, when I kind of opened that book up, it just kind of made sense to me. It combined with Trader Floyd at the same time, and he was into it. I think I had it, and then he was talking about it, and I actually read it, and it kind of put it together for me. And then I read everything. I mean, the Market Wizards books are phenomenal. I think you pull something from every chapter in those books. You know, just somebody can be a scalper and they say take small losses. You know, that still applies to a position trader. So I think you can learn something from every chapter in any one of those books.
Absolutely. And what kind of tools do you use day to day for your trading, whether it's a charting platform? You mentioned Tickermonkey as well. So what do you kind of use day to day to stay on top of the market?
Yeah, so I keep it pretty simple. I mean, you'll see when I start running through some stuff, but I'm literally using chart patterns, price action, and volume. That's all I use. I use the 10 and the 20 period moving average are really the root of kind of how I think about how the market moves. And then I look at the 50 and 200 period simple moving average. But I keep it pretty simple. I try to avoid anything outside of that. Over the years, I've tested different things. I've looked at, hey, you know, let me look at when RSI is overbought so I can sell, you know, things. I kind of consider, you know, if you've ever read the Turtle books, I was at times trying to over optimize what I do. And I just found, you know, you're never going to be 100% right. What I do works. I have more faith in that now than ever. And, you know, I just kind of stick to the process.
Very cool. And would you mind bringing up your charting platform, and let's take a look at the cues or whatever, the SPY, whatever you use to look at the market. I want to kind of walk through the year of 2020. And if you kind of could explain how you're dealing with the market conditions, what you're seeing at that point of the year, I think that would be really cool for people to see.
Sure. So really the kind of the way that I have my screen set up, you can see my screen, right?
Yep.
Okay. So I literally, sorry, let me move this. So basically I do keep this little news thing here. I honestly rarely, if ever, use it. I find the news kind of hits the market before here, but sometimes I use it to validate. And I have my current account positions open. And then I have what's called a focus list, which these are a lot of, I would say the 10 or 15 names I'm really focused on, and they're ones that are kind of, I'm interested in, if you will. And then my daily list are things like, hey, these are the 5 to 6 names that I'm looking to trade today or whatever. And to be honest, like I said, I'm kind of moving some of my stuff to Interactive Broker. So these lists are kind of messed up right now, but normally these are really tight. I'm really focused. I'm not looking at a lot of other stuff during the day. So, you know, I trade with some people and they're always putting out names and tickers, and that's great, but I'm happy to miss them. I've found that if I'm kind of doing things on the fly during the day, it may work that day, but, you know, generally speaking, it's best if I kind of stick to the homework I put in the night before.
Absolutely.
With that said, you know, I may say, hey, I want to buy this stock today, but if something's on my focus list and it's a name that I know, so SFIX today, this was my radar. I had kind of seen it last night, but, you know, I saw it quickly this morning that it was standing out and I hopped on it. So that wasn't on my daily list, but it was in kind of my core names that I feel like I know and I've traded. So I'm willing to take a trade like that. But as far as what I look at from an index perspective, and I'm not looking at the index as much anymore right now, and I can explain that in a second, but I'm generally looking at the NASDAQ. So as far as this year, let's see, this is February. So in February, I was pretty long. I had a great start to the year. You know, Tesla, I think CDLX was a name that I did well in. And I actually, for whatever reason, I was mostly cash on this day right here. I can't even remember why. I think I had just been stopped out of some names. And then whatever else I had left on this big gap down, I was gone. Now, really kind of the first mistake that I made among many is I kind of started trying to buy some names that were pulling back into their 20-day moving averages and things like that were really strong names, but So they were still like actually relatively okay. But the market just wasn't ready for anything to hold support. So the nice things I did kind of keeping my gains here, I chopped a little bit back, and then I did catch this rally up here, very small size. I'd kind of sized down and I wasn't trading as much, but I'd kind of realized, hey, we're below the 10 and 20 period moving average now. And, you know, this market's in a correction. So through here, I was making the occasional day trade. I was trading the indexes like the Qs and stuff. But I knew we were in a correction, and I was just trying not to get smoked, to be honest. But basically down in here, I this day in particular, well, really this day, because we kind of sold down and, you know, the sellers didn't sell it down. I started to think, you know, maybe some of the selling pressure is coming off the market. And, you know, I think in here, definitely I had some names long, but I actually was still, you know, pretty negative on the market in here. I think I definitely thought we were going to roll over and retest the low. And then this day was a unique day right here because we started seeing some names perform better under the hood. And I actually remember JT and Tickermonkey, I think they called this like a follow through day or something, which I thought was insane. Maybe it was this day they said that. I can't remember exactly. But to me, this was the follow through day. So what's the date here? So this is like April 6th. The big up day where I still really started making progress on some stocks that I owned. You know, Tesla in particular, for me at the time was the name that I was really focused on. And I mean, you can see, so I basically, and I was going to explain this more with Tesla, but I call, you know, this like a base and break. We kind of based into the moving averages and we broke down, and you ride the moving averages down. I mean, I'm not riding them up, but this is a bear market. And then right here is what I kind of call a wedge pop, where we come up to these moving averages and, you know, we kind of base. It's better to see on a stock than the index, but when we popped back up through here, that's kind of my signal to get long the market. And then you're really just trying to ride these moving averages. And I mean, as you know, this was pretty amazing in that we literally just rode this 20-day moving average higher for months. And then right here, we had what I call a reversal extension. So we were, you know, pretty extended in the trend. We got extended from the 10-day. And there was some crazy stuff going on in stocks here, like CrowdStrike gapped up massively, like a day or two, modified, or MDB. And I was expecting the market to come off here for sure. And unfortunately, it was almost like with the competition, people were making like 100% a month. And I don't know what I was thinking, because I knew I should sell for sure. Like I was posted on Twitter. I remember saying like, you know, this is a dangerous market here. But I was like, oh, you know what? Like I'm going to try to hold a little, and this is going to turn into a bull flag or something. And literally I got absolutely smashed right here. And you know, I was cash. I went to cash. I realized pretty quick, like, all right, you're an idiot. So yeah, I went out of the market there, and you know, we're trading below these moving. This to me is that reversal extension. So the target is really the 20 EMA for me. And then it's kind of like, you know, you just kind of have to reassess the price action. And if you just kind of think about it, you know, psychologically, we had this huge move. We got overextended, a little bit euphoric. I can't even remember what candle pattern this is, but it's, you know, it's some pattern. It's a pattern that matters. And we gapped down. So that's kind of like a 3-bar break that JT talks about, sort of. And I knew that we were in a correction here. So I pretty much just hung out. You know, maybe I made some short-term trades. And then this to me was another wedge pop. So we had this descending channel, and we popped up through here. And I got pretty long the market again. I mean, you know, when the market wants to go up, I want to be long. And I'll show you some big mistakes I made here. But I was long things like Beyond Meat, Roku. And the mistake that I made is this was a wedge pop on the daily chart, and everything looked good. You know, I was making tons of money, and, you know, hey, we're up here, we're going to flag out and just rip to new highs. You know, that's what I was thinking. But I didn't take into account that on the weekly chart, we were still building what I call a base and break. So we had kind of come up, but we needed more time. The seasonality wasn't right. We were in the middle of the summer, and we needed to really kind of bury people, which is sort of what happened to me. I gave some money back. Oh, sorry, I made a 2-year daily for this. So I gave some money back, and, you know, I was kind of looking in here like, hey, this is a handle. But when it got what I call too tight for too long, it was so obvious. Like, everybody knew this was a handle. I wasn't all that surprised when we had this shakeout. So I think even in here, I had started to reduce. So I gave some of my profits back and some names that I was long, and it sucked. But I didn't catch the bad end of this. But I did leading up to the election. I was pretty long in here. I kind of view big events like the election or something as just a catalyst. I really don't care about it more than that, other than it's a catalyst to create trade. And in 2016, I'd gotten pretty long the market like a day or two up to the election in a very similar fashion. And I kind of remember that, and I started seeing some setups and some names that I watch. And so I had gotten pretty long, and, I got pretty lucky. Then the vaccine came out here. I took a pretty, good whooping.
Yes, same here.
Yeah. I was pretty quick on the draw, and I exited some stuff in here. And then I think just kind of through here, I can't remember exactly, but I slowly started to build back in and add exposure. And then, I think the last 2 months of the year just made I had some nice trades, and, we've been trending ever since. And so we're in an uptrend now, and, we're in an uptrend. I don't know when it's going to end. We're kind of have this trend line drawn here. We're riding these moving averages. I've started paying attention to the indexes a little bit less, just because, and look, I'm not staring at the indexes all day anyway. But I see the underperformance in big cap tech, and there's such a heavy weighting in the indexes. And I just kind of have a theory that a lot of these mutual funds have about 5 to 8% of their book in these top, 5, 10 tech names, and they'll stick with those until they start to underperform, and then they'll diversify. And I think we're seeing a little bit of that right now, which is why we're seeing, the market spread out, the IWM start to outperform. And we're finding great opportunities under the hood. There's so many great opportunities right now. So it's a really great time to be trading.
Absolutely. And tell me a little bit more about just being in the 2020 U.S. Investing Championship in general. I mean, it was a great year for trading. And what was it like competing against kind of the top three, you, Tom, and Matt? All of you had fantastic performances. So tell me about what it was like being in the competition and competing against these top traders.
Yeah, so I mean, look, I entered to win. There's no mistake about that. I wanted to win. And I still actually, I don't know if I won. I hope I did. But the first 5-6 months, I think I was in the top 5 or 10 or something. I'm not really sure. And kind of no one knows who you are. And then, I kind of like it that way. But then, Matt and Tomas and I, we kind of separated ourselves. I think Tomas got out to a huge lead, and I remember thinking like, oh man, like with all the new margin he's unlocked, like how am I ever going to catch this guy? And I was pretty pissed about it, because I wanted to win, like I said. But either way, I managed to kind of get back into it. And then I had actually this year one of my biggest drawdowns ever. I took a hit off the top here, and then kind of is what happened to me, this right in here. So one of the things that I can fall risk to is I kind of got chopped up a little bit trying to buy into Square in here and some other names. And so it was like kind of the double whammy, and then I had a drawdown off the top, which, that stinks, but it's okay because, that's all gain. I mean, it's not okay, but it's all gains. Mm-hmm. But I really hate when I'm not getting any traction going. And I was in a pretty bad spot, and I actually talked to JT, and he told me some story about this guy Charles from IBD. No disrespect there, I don't 100% know who he is, but just kind of how he had a drawdown and dealt with it. And I said, all right, like I sold everything. I didn't watch the market like Wednesday, Thursday, Friday, 1 week, just kind of reset. And I came back with a fresh mind and in reality. And I just really started crushing it. And I just kind of needed to reset my mind, I think. And so then I just, I made some good trades kind of the rest of the way. But yeah, when you're competing with them, everybody starts, messaging you on Twitter. They look you up on LinkedIn and stuff, which I'm not, the most comfortable with that type of stuff. But it's cool. I would recommend it to anybody that's, maybe trying to get a little bit of exposure or, just, if you like to compete and kind of size yourself up against the best. Because I think if you look even now, the top 10, I think there's some pretty impressive numbers from a lot of different people. So.
Absolutely. And how does your 2020 performance compare to a usual year for you?
Yeah, so this is definitely, you're going to see my final number. This is definitely a pretty outstanding year for me. Like I said, I've been pretty consistent, high double digits. I've had some triple digit years. I had a big run in I was actually looking this up last night. I had a big run in 2013-ish or something, 14, 15, or it must have been 11, 12, 13, I think, because 14, 15 was kind of a choppy market. But I did about what I did this year over a 3-year period. So, yeah, this year was phenomenal for sure.
Absolutely.
Great start to 2021. So hopefully I can beat it.
Yeah. All right. So let's get into your kind of trading strategy. So first thing I want to ask you is a few questions. How do you kind of classify your trading? Are you more of a swing trader or a position trader? How would you classify your style?
Sure. So I would say I'm I'm still sort of trying to figure out, I would say I'm an intermediate term trend follower, if you will. I'm generally holding things for 6 to 12 weeks. Joe Fahmy's a guy who's helped me a lot over the years. If anybody who follows him, he talks about the market being healthy 2 to 3 times a year, and you really want to hit those times hard, and try to trade lighter, shorten your time frame the other times of the year. So that is what I'm trying to do. So I would say is what I've kind of become comfortable with is I'll probably have about half my portfolio in what I consider to be core names, that I'm going to try to hold for that 6 to 12 week period, or, this year, 20 week period, whatever it may be. And then with the other half of my account, I'm probably taking some more swing type trades, maybe hold it for 7 to 20 days or something. And I think the reason that works for me is because I trade with margin. And so it allows me to book some gains on those swings. And I feel like I'm making progress, and then I can, hold my core names through a pullback or something like that. So that's what I found works best for me. Yeah.
And you already touched on this a little bit, but how much of your trading style is technicals versus fundamentals for you?
Sure. So I think, maybe 3 to 5 years ago when I really wasn't all that bright, I would have told you price action is all that matters, blah, 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 blah. And it is, don't get me wrong. But if you really want to hold a name for 100, 200, 300%, you better know the story, you better know the theme, you better really believe in it, or else you're going to capitulate on, a 10, 15% pullback. So I actually think that I'm a lot more fundamental than the average person would think. I read a ton. I really do get to know the story. Oftentimes it's a product I use, or really I pay a ton of attention to what my wife is using, things like Peloton or Pinterest. These are all things she's using, or even my little brother who has zero interest in the stock market, or, one of my buddies who literally has an oil company. These guys use obvious products. And when they use a new product that to them is obvious, that's when the light should kind of go on. My sister-in-law uses Stitch Fix. And so kind of when it comes on my radar, oh, she likes it. It's all right, there could be something going on here. And then you do let the price action confirm what it is that you're doing, for sure. Like I trade off the chart. I trade based on the price action, but I am not the guy who's buying like the high flyer on a volume scan because it's going higher and I've never heard of the company before. Like I like to know what I'm trading.
Very cool. So yeah, could you kind of explain, once you've kind of heard something from maybe seeing products that your family is using, how does that come up into your process and you actually go ahead, investigate what it's all about, and then ultimately trade it? So how do you find the stocks that you trade, basically?
Sure. So, I mean, I basically just find them. I do look at the new highs list. I look at big gap ups. Like I love trading post earning per share, bull flags. It's definitely one of my favorite types of trades. I love big bases. So if there's a big base and then there's like a catalyst that can push it out on volume, that's great for me. But if you look at some of the names I trade, like Pinterest, Peloton, Uber, Stitch Fix, like these are all like things that we know. Now, something like JMIA, you know, I may not understand that, but I understand, like I can spin the theme in my head, like, oh, it's the Amazon of Africa. And then I feel like, okay, I trade this. Or like Fastly, Cloud Edge, the edge of your network. I see everybody moving to cloud infrastructure. Oh, we need security. Like I don't know what CrowdStrike does, but I understand the concept, you know, protecting ourselves and everybody moving online. So once I understand that conceptually, you know, then I'll start paying attention to the stock. I don't know if that answered your question, but
yeah, I mean, we talked about this a little bit before we actually start recording, but how do you kind of screen for these stocks? Or are you only kind of looking at what's out there in the real world and then taking that back, looking at the chart and seeing if it looks interesting?
Sure. So, I mean, I'm always paying attention to what's moving. You know, I pay attention to Tickermonkey chat, you know, what some of those guys are doing. You know, if there's a cool name, I pay attention to stuff like, you know, the election I thought was going to be good for green energy. So I started doing a little more research. I found TPIC that way. You know, so like a stock like Plug, which is a stock where I don't own any of it. I've missed this whole move. I mean, it was on my radar months ago. I had it actually. If we pull it up, I bet I have lines drawn on it down in here. Never traded it, but you know, naturally when something starts going up, I want to try to look for a spot on board. Now this wouldn't be like a sizable position for me because I don't truly understand it. Whereas something like Tesla would, because I believe in it and I really get it. So that also plays into my position size and kind of how well I feel like I know the company.
Great. And what kind of setups do you look for before you jump in on the trend?
Sure. So overall, like how I think about price action just in general, there's basically 4 different setups for me as far as like how price works and kind of how I operate within that. So I think like a stock bottoms on what I call a reversal extension. And then after the reversal extension, you'll have what I call a wedge pop. Then from there, you'll have what I call an EMA crossback. From there, you'll have a base and break at some point if it's going to work. And then from there, you'll top out on a reversal extension. And, you know, price kind of moves through those different patterns throughout their movements in their cycle. So what I was going to do here is I thought Tesla did a real nice job of showing this. So I'm not going to go too deep in this move into February, but, you know, we moved, this to me is a base and break, and we kind of ride the moving averages higher. This to me would be a reversal extension in that hugely extended from the 10-day, like what the 10-day is at like 135 here. This thing traded up to 190. So what you're about 45% extended. And you've got huge volume, right? So this to me is people are capitulating to the upside. So to me, that's like a sign to step off this thing. This is kind of the top of the stock. We try to trade back up. And then right here, we trigger what I would call like a wedge drop. You kind of tighten, you can't make progress higher, and then you fall back through the moving averages. And then, you know, to the downside, things are sloppier. Like this would be your EMA crossback where you traded down through the moving averages, you trade back up, find resistance, you roll back over. But kind of is where I wanted to start, though, and really explain what I do, because the majority of what I'm doing is to the long side, is a reversal extension is really we're extended to the downside on the daily chart, but we're into a higher time frame level, right? So I'll show you how you can use this on like a 5-minute chart with the daily chart in a second. But if you look at the weekly chart on this Tesla, so if we come back out and look at this weekly, we had a massive base right here. We had this shakeout here, and then that's what led this move. And so I believed in Tesla. I had conviction in Tesla, which certainly helped. But we sold down and we're extended onto the daily into a higher time frame level, right? So we're into this level. So you see that. So let me pop back out to the daily. Sorry. So if I come back out to this daily chart, we're extended to the downside here, and Confluence is big, right? So we also had this 200 period moving average here. And I actually bought Tesla right here on this day. I think it was around like $400, or maybe it was $350, I think, actually.
Pre-split.
Yeah, pre-split, yeah. And so the setup for the reversal extension is you're buying the extension, you know, with the stop on the low. For me, I was really kind of trading this on a shorter time frame. And your target is the 20 EMA. So that is, and that's really, you're looking to peel a piece there, mainly because I expect the market to pull back at the 20 period moving average. And then you'll see with Tesla, we then built what I call a wedge pop. So we resisted here at the 20 EMA, and we kind of chopped underneath here, and we kind of built, you know, some sort of basing type pattern. We could have rolled all the way back over, and, you know, it would have been invalidated, but we didn't, and we popped back through the 20 EMA. So that's a wedge pop to me. And then the next test back of the moving average is what I call an EMA crossback. And it is a good time, in my opinion, to try to execute on a low risk basis, because let's say you miss the wedge pop, you like the name, you know, you get an opportunity to try it versus the 10 EMA or try it versus the 20 EMA here. And then, you know, the idea is you want to ride those 20 period moving averages higher, or the 10, 20 day kind of whatever moving average the name is respecting. So I had actually bought into Tesla here. I took a trade in it. And to be honest, I could have traded this better, but, you know, I think I made like 100 points out of it in like a day. It was crazy. But then I really got in on this on the wedge pop here. So I got in on this on the wedge pop. I believe this was earnings, if I recall correctly, and it was like higher than this, and I really should have sold it all in the post market, but I sold some of this in here, and then I stepped back in on it on the EMA crossback to the 20 EMA. So literally like a day and a half later, but I mean, this is actually percentage-wise a pretty decent move, and it kind of didn't do much, and I added to it right here. This is really where like Tesla became like a real trade for me. Added to it here. This was like a nice big cup and handle. So really, when you're going to get a sustained trending move, in my opinion, you're going to have a big base. So this is all like very tactical, but this is where it turns into a true trade. So this is a pretty big cup and handle. We go up and we build what I call a base and break now. So this is like a true basing pattern into the 20 EMA. I really like stocks above the 20 EMA. I find that when things get below there, some people like to hold to the 50 SMA, and you can see that it worked pretty well in Tesla. For my personality, it's too long. I like the 20 EMA. So we build a base and break here, and we trade higher. And then this right here, we start to get extended from the 20 to the 10 EMA. That to me is like the reversal extension, is kind of like the end of this trade. And we just kind of base again. So to me, this is another base and break. And this was also like a descending channel for me. And I bought back right in here. I actually traded this, just to be, you know, transparent. I tried this 2 or 3 times in here and kind of got chopped up. So, you know, if I can reduce that, that's a big goal of mine this year. But I bought back in here. It trended higher. And I sold out right here. And then I really took a hit right here. So I bought back in versus the 20 EMA. And I added at the close here, and I had a pretty good sized position on. And after the bell here, I even believe this might have been a Friday, actually. It was announced that Tesla wasn't getting added to the S&P, And I think I sold down around like 360 or 380. I can't remember exactly, but you know, that hurt for sure. And you know, what are you going to do? And then Tesla really kind of based for really like a month, which is great because if you think about it, I mean, this thing went from 150 to 500 and it needed time to consolidate. And then everybody kind of knows we gapped up on the S&P inclusion, and I took a really nice trade into year end, where basically I bought, like, I love big gaps. So one of my sayings is, or it's not my saying, but some of the things I picked up are big gaps up equal the streets caught off guard, right? So nobody kind of expected this. It didn't fill the gap. That's a sign of strength to me. So I bought through this 460 level. I actually did sell some here into 600, which I bought back off the 10-day. And I kind of did the same thing here. I did a pretty good job on this into year end. But, you know, really it trended all the way higher. I sold this yesterday, basically in the pre-market, and reason being it got extended from the 10-day, and, you know, that's a good time to take profits. I think one of the things I'm trying to get better at is just being comfortable, like, hey man, you just took like 300 points out of this thing. Like, it's 150 points from the 10-day. It's like it's okay to take it off. And if it goes to 900, like, who cares? It's one of the things I'm trying to get more comfortable with. So I do have a little of this on now, but, you know, realistically, this trade's kind of over for me. If it trades in this wick tomorrow and really builds out this flag, you know, I'll add some back. Tesla's one of the few stocks that I kind of more trade a little. It's kind of my favorite stock. So that's, you know, that's kind of what I do. So you get the reversal extension, the wedge pop, the base and break, and then you usually end on an extension of some sorts. And as long as we're in an uptrend, I'll buy pullbacks to these moving averages. I'll let the market prove me wrong. So that's, you know, kind of how I view it. But some other names. So FSLY, you know, I know Matt traded this, so I was all over this story. My little brother's in cloud networking. My buddy Joe really knew this story really well. I actually think that I had tried buying this in here, and I you know, got stopped out. You can see here, I think I probably tried it right here. I tried it right in here, and then I knew earnings were coming, and I actually exited this before earnings. But I was really aggressive on this gap up. Like, I think I had like a 30 to 35% position, which is, you know, pretty much the max for me. And this trade was just easy, you know, which is, if you talk to a lot of the older, really good traders, they tell you, you know, you're in the money from the get-go. I think I sold a little right in here, and then when it based out, I started what I call a second position. So I'll trade the first position from down here, and I'll trade the second position, you know, right here. So I bought more of this. I'd probably reduce some of this second position here just because that's how I roll. And then I sold my entire position on this big red bar here. And in retrospect, you know, it's easy to be a Monday morning quarterback, but kind of same deal. You know, we're getting real extended from the 10-day. Like, it's okay to take some off the table. So that's what I'm trying to do better this year. And then I bought this back right here. I think this day at 85 actually is where I had it. And it went up, and I had all of it into earnings. I had like a 35% position. It gapped down, and I just sold it. So I think I made a little bit of money. I think I made 2 or 3 points. And, you know, I was out of it. Then is what I did is right in here, I tried this thing again. I literally bought this at 85 again. I remember because it was the same price. And I was really frustrated with this. So the market was kind of running higher here. And to me, this is kind of like wedging action where we're going up and we're scumming back down. You can see that. You can see that here. So I was kind of thinking like, oh man, I'm about to get, you know, my what handed to me. And then we just exploded, and it was unbelievable. Actually, I think it's because we took this out and we had this gap here. And I remember thinking, like, right here, I was like, oh man, there's going to be not a lot of upside to holding this into earnings because we're so extended. So like, even if we have good earnings, you know, it may just base out for a couple days, but I held it into earnings. and I got smoked. So I sold it, I sold it when it rallied up on the open, but I gave quite a bit back here, which was no good. And I've pretty much avoided FSLY since. I kind of think this thing's broken. Kind of a mentor of mine has told me, you can buy this again at 136. And if it's going to go to 1,000, like everybody says, like you're not going to miss the move from 90 to 130. So
absolutely,
it looks like it's doing okay here, but it's just not even on my radar. So that was one. And then Livongo was another one of the great trades I made this year. So relative strength to me is like the holy grail. I want to make sure that I drive that home. Relative strength is really how I find the names that I'm going to trade. Relative strength is huge. So I was on Livongo prior to, I think I bought Livongo right here, and the market started to fall apart and I got stopped out. I think I lost a little bit. And then actually right in here, I was going to short Livongo on an EMA Crossback. I never did. And then it was inside on this day right in here. So I inside bars as well. So we were inside and we broke higher. And I think I had a little bit on, but really not too much. And then right here's an EMA Crossback right into the 10-day. And I really sized up into this thing, actually. I think I had like 30 to 35% of my position on here. My price was like right down in here. And I felt like I was protected by the moving averages. And I was just kind of willing to risk a break-even trade. And then when we broke out of this flag here, I even added a little more just because I didn't have that much on, which is not generally what I do. But we started moving higher, and I started reducing this into this like 38, 39, 40 area. Looking back on it, I wish I didn't do that. But then I had like such a nice gain that one of the huge mistakes that I made this year is right here. This was a great setup. Like this was a great setup that I would buy all day. And I think I had at this point, because I'd reduced, I probably had like a 20 to 25% position in my account. I didn't add here, which was a huge mistake. But either way, I was able to ride this higher, and I actually sold this right. I got stopped out right here when it broke the 20-day, and I bought it back the same day. And then that's when I did get back to like 30 to 35%, because William O'Neill kind of has that rule when it loses the 50-day trades back through, like you got shaken out, it can actually be a real powerful signal. So I did that on the 20-day. And it kind of bounced around in here, and I just sat with it. And then I think like Goldman put out a report saying like sell Livongo or something. And I was like, all right, great. I love being on the opposite side of Goldman to a degree. But then it just trended up the 20-day moving average. And this is normally where I might have sold some stock, but I didn't. And I just raised my stop. And then on the merger, we were extended from the 10-day, and I had already been thinking like, ooh, I should be taking some off here, because we kind of had, it just felt right here with this tail, like, buyers might have exhausted themselves. So I was already prepared something could be up. And then when I woke up in the morning and they had the like merger, it was like, okay, just kind of how the election was a time to execute. It was like, we're extended from the 10-day on a big move, and there's news. And I immediately took off half my position. It was above here. It was in the pre-market. Yeah. And then, fortunately, I did hold half my position down into like 130, like down into here, and I sold the rest. So I tried buying it back versus the 20 EMA, because like I told you, I will buy versus the EMAs until I'm proven wrong. And, it kind of came back, but you could just kind of tell the wind was out of this thing. And I traded it here. And it kind of similar Fastly, it was dragging on my account. It was kind of wedging higher. And either this day or this day, one of these days I sold it, because I just was like, this thing is God. This looks like a nice chart, but in context of the market, this was trading not well. So yeah. I got out of it. I missed all the junk that some people caught in TDOC when it sold off. So those two Fastly or three Fastly, Tesla, Livongo were really my stalwarts. I mean, I had a bunch of trades. I mean, it was a great market. I had Spotify from 123. up into this area. Twilio was a good name for me. But here's a name that similar to Livongo, Cloudflare showed relative strength all through the correction. Like I actually, literally, my wife and I picked this out as a stock that, I was going to teach her about relative strength. And we caught it in here and she bought it in our long-term account. And I think she still owns it. And I got stopped out. And then I think I tried buying it again in here somewhere. And, I made a little bit of money, but really I had watched this stock that we had talked about double. And I think I made no money in this thing.
Yeah.
Here. I was so pissed. But I did catch this trade. I bought right here. And honestly, a guy that I trade with kind of mentioned it. And I was like, all right, what am I doing? I'm going to give this thing one more shot. I remember I bought specifically at like $43 and up and sold the next day. And I think I even said like, oh, since I own this thing, everybody's going to lose money. and then we just ripped.
Yeah.
And it was like, great, that's what you want. And I was holding it in here. We had such huge volume. I knew the story really, really well. And so I was looking to kind of hold through all this. I ended up getting stopped out like right here. But then literally right here, a couple of days later, I bought back in, and I just kind of, I was real confident that we were on. And I caught this whole move up, and I sold on this day when we broke this trend line. We kind of up. You could kind of see sellers sold it down here after selling on that doji. So you really had you had a stall day, a distribution day, a day where buyers kind of couldn't recover. Like they tried to push it up, but the volume was light and they sold it down. And then when they gapped it up, it was kind of like, all right, if they can't hold this thing, and we went green to red, and I got out of the trade. So that was kind of that trade. I did try this off the 50-day, which I exited, but I think Net's probably going to head back to new highs in time. But I'm actually not in it anymore now.
Awesome. And I've got a couple questions about your process. So first, how do you define relative strength? Because you talked about how both Livongo and also Fastly were showing something before the correction that got you interested. So what kind of characteristics do you look for as signs of relative strength?
So Livongo is like a really, really, really great example because we are selling off in the market. So let's look at the NASDAQ here in March. And let's just look at this. So I don't know where Livongo's trading, but this is the 228 low, and we rally up and we take out this low, right? And then we put in a low here and we rally up. So 228, just remember these dates, 228, 312, and we make a new low. And then let's go look at Livongo, what Livongo did there. So 228 on Livongo is right here, right? So the market right here is selling off. Livongo is trying to rally. Like I'm trying to buy this here. And understanding I'm in a correction. So I stopped out of this pretty quick. But then like we make a new low on what the market made a new low. What did I say on 312? What does Livongo do the next day? It doesn't make a new low. So we're not ready to go higher yet because there's too much pressure from the market. But this thing, like we break the next day and it's just like it doesn't want to go lower. So the market is going lower and this stock is being accumulated under the hood. For sure. You can see it in the fact that every time they try to sell it down, somebody supports this thing and brings it back up. And then when the market does bottom out, like I was buying in here, and 4-6 is really when we had the follow through day. That's when Livongo was able to just explode higher. So example, I think a great way, now that we're kind of more in an uptrend, a great way to look for relative strength is, let's say that the index sells down and then we rally up, and let's say the index rolls over into the close, because sometimes they like to close the market on the low to scare you out. But let's say you see a stock that when the market rolls over later in the day, it makes a higher low and is dying to go higher. That's a stock you want to have on your radar. So I'm looking for relative strength in the sense that I like to look for stocks that when the index is making a new low, that stock is showing a different set of character. It's making a higher low, Or like if the market's really selling, you know, maybe your stock is selling, but it doesn't want to sell. And that's actually where the wedge pop develops. The market's moving down and your stock may be moving down, but it's fighting like crazy just to stay alive. And then when that market turns, you know, your stock's going to explode.
Absolutely. And another question I had was, how do you draw your downward trend lines? And when you're buying a pullback, I think an EMA crossback is what you call it, a pullback to the simple moving average or EMAs. Are you buying as soon as it touches that moving average? So are you kind of playing against that level, or do you wait for the bounce up off that moving average?
So it depends. So like, I'm just going to go to a recent example because I remember it, but so like Peloton, right? I bought Peloton pretty much like right off this 20 EMA intraday. And, you know, I'm gonna have to look at an hourly to show you this, but you can kind of see that the stock kind of didn't want to go lower. And then I'd be willing to bet you, if we could look at it on the 5 minute, this was a wedge pop. I can tell. So like right in here, I would buy it, and you know, I'd probably have like $1 stop. And then the next day though, so like I generally don't buy my whole position at one time. So like I may have gotten some on, and then the next day, so now I'm like, okay, I got a starter on this thing. I see this little mini channel or flag, and the next day when we gap up, I top it off, and then I move my stop up. So buying in 2 pieces, I've got a cushion on the first. I can add to it. It's going to bring my average cost up, but I also feel like more confident it's going to work. So I, you know, that's generally how I'm putting a position on, is like 1 or 2 buys. Sometimes like here's an example of a trade I made where we gapped up on earnings. So I bought some of this in the post market, and then I think the next day I bought some more. And then like the next day I bought a little bit more. Just because it's like, I feel kind of like I'm a little bit exposed here. Like I have some potential risk, and given I'm probably going to sell it if we lose this low, you know, it just makes me feel more comfortable when I piece into it in that situation. And then you can kind of see what happened with this one. Whereas I'll show you, here's another trade I made more recently. You know, the FUBO story had kind of been brought to light to me down in this area, like the $10 or $12 area. And so I had a little bit of this, and I made a huge mistake here where we gapped up on earnings. And when it pulled back in, I think I like bought some in here, and it finished on like the low of the day. And I remember thinking like, God, I'm such an idiot. I've been sitting in this thing for like 3 weeks, and I felt like I screwed it up. So I just sold the whole thing. I said, all right, like, just regroup, do something better. And we kind of had we had this inside bar here, and then we had this wick here. So one of the patterns that I like to trade is called the wick play. And this is a strategy that I use in context of like the entire pattern, right? So we had this stock that I liked the fundamentals. I understood it. I understood the theme and the story, and we were coming into this moving average. So I actually really, really put a position on here around $16, and we traded up. I thought we were going to go here, and we didn't go. And I bought a little more right in here around 28.50. Yeah, 28. I jumped the gun. I jumped on this, and it didn't go. And I was pretty frustrated, but I still felt like, look, I'm going to give this to below the 20 EMA. And then I got pretty big in this thing right here. I added more. I had about a 35% position, and then you know, I think my first sell was in here around 48, and then I was selling like 53, 58, 60. And I exited my final piece. I can't remember if it was the pre-market here at 53 or 52, or if it was the end of day here. But that's where I got out of it. And I wish I'd bought it back today, and unfortunately I didn't. But yeah, sorry, I kind of went on a tangent there.
No, that's fine. This is a good example here. So how do you decide how extended from the 10 EMA you're willing to go? Because this the day before almost the climax, it also looks like a climax run almost.
Sure.
So yeah, how do you decide when to sell? Is there a little voice that goes off inside your head that tells you this is getting too easy? Yeah, kind of tell me how you decide when to sell your position.
Sure. So in this specific instance, I was actually thinking that this was around the beginnings of movement. And I took a little bit off here, and I was thinking, okay, this thing's extended. It's going to like flag out, and I'm going to get to add back and really hit this thing hard. And so I was expecting this to pull back here. We kind of had this tail. I mean, we're 50 versus, we're 40% from the 10-day moving average. And some stocks like a Procter and Gamble or something, it may only want to get 5% from the 10-day. Whereas a high flyer, a BLNK or a FUBO or something like that, you're going to have to adjust how you treat the stock because it moves differently. But that's kind of what I was thinking, what you just said. And then when we ripped higher the next day, I was like, holy smokes, this is crazy. So I just said, look, basically what you said, I said, this thing is just going nuts. This isn't a natural price movement. And I exited my position. Now, I certainly didn't expect what happened. I actually tried to buy this back here versus the 20-day, and I got stopped out. And then, I don't know. I've never seen a move like this before, so I've kind of stayed away from it. But with the amount of volume we saw today, this is one that I may put back on my radar. I want to see it trade a little bit more and become a little bit easier to trade.
Yeah, and you've mentioned this a little bit before, but how do you decide what position size you want to put on a stock? Is it based on a combination of both the fundamentals and the price action strength? Because you said you put up like 35% in LVGO and Tesla, and it's great when you can concentrate in a huge winner. But how do you kind of build that up so you feel comfortable holding that size in one of these stocks?
Yeah, so it's definitely, the relative strength within context of how the market's trading. So like LVGO, for sure. Whereas something like Tesla, like I know a lot of people think Tesla's really volatile, and it is, don't get me wrong. But Tesla's nothing like Tesla's not like, right?
Yeah.
So in Tesla as a stock, I will make some day trades in Tesla. It's kind of a little different. It's my baby. It's like the stock that I trade like every day. So something like Tesla, and then the story. So like Fastly, I knew that story inside and out. My brother sells in that space, and he had told me these guys make the best product in the space. And when the earnings came out and it gapped up, it just like the stars were aligned, So generally I'm taking like 12 to 15% positions to start, and usually adding like 8 to 10% to my position to kind of get to my normal 20 to 25%. So I would say, it's a few times a year where I'm like, all right, this is ready to go. And some of that is just feel and intuition. Like, hey, there's a catalyst, right? Having a catalyst of some sorts is big. And then the base, like I'm rarely going to be putting like a 35% position on a pullback to the 20 EMA. It's like if we're breaking out of a base and this thing really has the firepower behind it where it can run for like 2 to 3 months, then I think it's worth putting some more size on it.
That makes sense. Yeah. And I've noticed on Twitter, you post a lot of your charts, and you talk a little bit about where you're setting your stops, like the low of the day. Oh, it moved up, so the low of the day. So could you talk through your process and stop loss management and how you deal with the position, both at the very beginning, maybe when you're buying on that earnings gap up, versus when it's just broken out once more from pullback to a moving average?
Sure. So let's look at Peloton. I'm in this Peloton, and let's just start from here where I put it on, right? So I put this on, and for me, when I put this on versus the 20 EMA, my stop is the low of the day, because basically like my reason for buying is the 20 EMA. If we lose this, like my reason for buying is gone. And now when I add here, my reason is we broke out of a flag. So like if we trade up, there is a little bit of room for error. You could be wrong and it could reverse your stop still the 20 EMA. That's just like the risk in trading. But when we traded up and closed on the high, now I consider this like a breakout day. So like, I don't even know what you call it, but like a breakout bar or an explosion bar or whatever you want to call it. I view it like if this trade's going to work, the low of this explosion bar, we shouldn't violate that.
Yeah.
Right? It's like it really wasn't that great of a bar, and you're probably going to base out or potentially roll over. So I'm using the low of the day a lot of the time. And then as we work higher, so I did end up taking this off yesterday for other reasons. I wouldn't normally do that, but I was just trying to control my exposure. But I bought this back. It dipped in, and I bought it back today. And if it trades up through this pivot here, like that I was still down here, because a lot of the time I still would be. So let's just treat it that way. If it traded up, pulled back, and based, right? I consider this basing. And then if we reconfirm, I call it reconfirming price strength confirmation. Like if we reconfirm and break higher, then I want to move my stop up. So let's look at like any name I've traded lately. That's trying to think of something that I've traded lately. Yeah, we'll look at crowd. So crowd, right? Crowd broke out and it ran up and it pulled back, right? A lot of people got shaken out here. I am like waiting to see where buyers are going to step in and support this thing. So like I'm not getting shaken out here. And they step in the next day and support it higher. So this is like, look at the volume, right? We've got good volume and we almost pulled back to the 10 EMA. So I'm moving my stop up to this low. And then we flag out, we break out of the flag, and then here we revalidate and reconfirm price strength confirmation. I'm moving my stop up probably to this low right here. I probably wouldn't put it at this low just because, I mean, this isn't really like an explosion bar per se. It's, you know, we pushed the level, but I don't want to get ticked out, right? So I'll put it like right here. And then when we extend up through here, I actually took this off into this rally. Part of that was the competition and coming into Christmas and stuff. So I got a little lucky there, I guess. But then I got back in here, I got in here, and then I really did trade the competition here into year end. But, you know, now this new trade right here, right? You're buying versus the 20 EMA, maybe you're adding here or something. You know, you're let's say you got it in down here and we break out here, you're moving your stop up to like here. We pull back, we re-break out, you're moving your stop up to like right here. And then right now we're a little extended. We'll probably base here for a couple days. And if we revalidate and confirm higher, you'll move your stop up. So it's almost like Darvas talks about his box method. I mean, I think my boxes are a little bit smaller, but I'm basically doing that. I'm looking for a stock to go up and rest. And when it reconfirms, move your stop up. And you're looking for stocks that are going to trend, and you're just kind of trying to ride them higher. And then as you get further and later into the trend, one of the things that I looked at this year when I kind of studied my trades is I want to be looking at the weekly chart more. So for example, like on the weekly chart, when you get that first extension, you know, when you get extended from the 10 week, one of the things that you more likely want to do, like if you trade like me, I'm not saying everybody does, but when you get extended from the 10-week moving average, if you're also extended from the 10-day moving average, which is often like the second extension, you know, that's generally a good time to take some off. Not because the stock's topped or anything like that, but it's just likely to consolidate some. So, you know, I do think Tesla here, you know, I still like Tesla, but, you know, Tesla's not at 460. It's extended here. It needs some time. If Tesla really rocketed higher here, you know, I would be looking for like a heavy volume type blow off, just kind of based on where it is versus the 10 week. So, yeah.
That makes sense. And since you seem to be so aggressive with your stops, if you enter a trade and it doesn't kind of go the way you expect and you actually are red on the day near the close, do you take it off, or are you willing to sit with like a 1% loss going into the end of the day?
Depends. It depends on my size. Like if I have a 20 to 25% position on, I'm definitely selling at least half. Like definitely. Now, you know, I kind of take it case by case, but yeah, it's depending on my size. And also depends how much I'm down on it. Like there's positions where I may actually like buy a little bit with like a 3 to 5% stop, but maybe I've got like 4 or 5% on. And then let's say I add another 4 or 5%, and let's say I'm at like, you know, 10% position. I'm unlikely to be taking more than like 3% risk on that. Because that's about 30 bips on my account, which doesn't sound like a lot, but you get 10 positions on at 30 bips and they all go south. You're down 3%, you're on margin, you're down like 7%. So
it's never just one of these growth stocks that's down on a day. It's all of them. It's all or none,
Yeah, exactly.
Yeah, and we've talked a lot about price action. So I'm curious to hear how you use volume in conjunction with what you're seeing on the chart. So could you explain what you look at in terms of volume on these breakout days and when stuff is pulling back into a moving average?
Sure. So literally one of the big things Trader Florida taught me, this is like a fundamental truth as far as how I trade, but volume equals price, cause equals effect. And so, you want to see volume confirm the move in a stock. So it doesn't need to flow in right away, but I often find that it should flow in within by the close or the next day. And it's just confirmation of what's happening under the hood. So you want to see big volume, but you have to take volume in context. Like if we see a massive, stroke of volume in a stock's, extended from its 10-day moving average and it does a doji, like that like someone I was talking about on Twitter the other day, how I was looking for like a volume, like heavy volume in Tesla, and the guy was like, isn't volume good? And it's like, it is, but when you're 15, 20% from the 10-day, when you see like that blow off type volume, really a sign that there's trade happening. It's a sign like, hey, institutions are taking some off the table and there's stagnation here. So I always use volume in context. So if you think about that, volume equals price. So if you want price to move, you want to have volume confirm it, and cause equals effect. Like the volume is the cause that leads to that 2-month trend. If you get like a tiny little bit of volume, you may get like a 2 to 3 day move. But if you get big volume, that's where you've got your chance to get like a 30, 50, 100% move and really, really do something that can move your account. And likewise, when that trend is over, volume equals price, cause equals effect. You get that selling volume, it's going to lead to that stock to fall apart. The change in supply and demand is reflected in the volume.
Very cool. Very true. I also wanted to ask you on the portfolio level, because you're managing these trades very kind of day to day. So on a portfolio level, how do you manage your different positions? You said you kind of took off Peloton recently just because maybe you're feeling some pressure in your overall portfolio. So what have you learned over the years in terms of portfolio management to manage your positions?
Sure. So, this is stuff I'm still learning, like for sure. Trust me when I say, like, there's way better traders than me out there. But I basically, one of the things we saw last year is when like the stock that really like led the move topped out, you got some consolidation in the market. So when I looked at Bitcoin, and I'm not so sure Bitcoin's as important as Tesla, but when I saw Bitcoin kind of sell off over the weekend here, and I knew Tesla was pretty extended, I came in and I sold my Tesla in the pre-market, and I had taken just some positions off, more because I was on margin, and I just wanted to be a little bit lighter. When you're on margin and you're not sure, you want to not be on margin. So then I just kind of saw Bitcoin do okay. I saw Tesla looked like it was, I'm not sold entirely on what Tesla's going to do here. I think it just needs some time to chop. But I had some progress on some of my other names under the hood. And so I, was willing to, I was right for like a day, but I just felt comfortable. And that's, part of being able to hold the rest of my account was let's take a little off the table for the rest of the account to, feel good, I guess.
Makes sense. And how many positions at a time do you usually have?
So I have, changed over the years, but I think is what I've become, I've gone like in my opinion, irresponsible 3 to 4% or 3 to 4 positions fully loaded. But I've become pretty comfortable with like 12 to 15 positions. And the reason I kind of like that is because I find when I'm getting above that, it's a red flag. Like, hey, we're getting a little long in the tooth, just sell something. And then when I'm below that, sometimes you think your stock is like, God's gift to the world, but it's not. And it's, and everything's moving and your name's not. And it's really frustrating. Whereas I feel like if I'm in 12 to 15 names, there's a pretty good shot that I'm going to be in like 8 or 9 of the pretty good ones.
Very cool. And speaking of stocks you're in right now, do you want to go over any names that you're kind of looking at right now, or actually just started positions recently?
Sure. So I'll look at this one because I know a lot of people on FinTwit are really, really into TeleDoc. And TeleDoc was a good name for me with Livongo. But it's chopped a lot of people up for sure. I mean, look at this thing. It looks not great, as far as the choppiness. And I think I tried it in here, and it worked a little, but I could just kind of tell it wasn't ready. But is what I was looking at is I was looking at the monthly. So I can't emphasize enough. Like a lot of people talk about the weekly. The monthly chart is hugely important. And you can see that we had this move on the monthly from 85 to 250 or so. And we had the deal with Livongo. And I still really believe in this story. Like, I think Livongo is going to be able to cross-sell across TDOC's network. I see TDOC in all these different corporate health plans. And it's only going to continue to grow. I believe in telehealth. We got to become more efficient from a healthcare perspective. And so I was looking at this monthly, and very similarly, my approach to the moving average is it's fractal across the 5-minute, the 15, the hourly, the daily, the weekly, and the monthly. So we're pulling down into this 10-month moving average. And then there's a couple of just kind of subtle clues here. So if you go back and look at the Tesla move from like 300 to 900 or like pre-split, it shook out that big base down to like 250. And we saw that here with TeleDoc. So obviously people have been burned, people are frustrated, and we shake out on volume, on big volume. And to me, this is actually when the stock came back on my radar. I was like, okay, there could be something up here. I'm not sure yet. And then if you go look at the day, and we're around the 200 SMA, which is great. And we're kind of basing on this 200 SMA. Here's another shakeout right here. So now we've burned these people. The people who hopped back in got burned. And then I'm sure I hopped back in here. There are people that hopped back in here who didn't sell here like I did. Not that, trust me, I'm the guy that doesn't sell plenty of times. But we had this kind of shakeout here. So this was kind of a shakeout. This was a shakeout. And when I saw this and us recover off the 200 SMA, I was like, all right, the monthly has base for quite a while. We've got multiple shakeouts. We shook out the huge base. And so I started buying this in here, and I put more in here. So this to me is more like a 20% type position, like a core name, but it's not one of my big boys. And now is what I think is going to happen. We'll see. Is I think this is basing under this 237 level on the weekly. I look at the weekly. This is kind of the level. This is kind of like a big double bottom base, double bottom with a shakeout. And I think we're going to base in here. And I personally think we're going to break out and push through this level. And, if you look at the monthly, I think we could have a big move on our hands. So that's one that I'm kind of looking at right now. Another name that I really like this year, I took some nice trades in this into the end of the year, but I am looking for a more kind of sustained move. But I like JMIA, so this is kind of like the Amazon of Africa. I think if you consider the potentially total addressable market that they've got, and they're involved in a lot of different things. Sometimes I sort of almost think like they're doing a little bit too much, and that they're doing logistics, e-com, just kind of everything. But basically, I look at this monthly. I look at this monthly chart, and we obviously had the IPO move up, and we had a lot of profit taking. They haven't had the best earnings and stuff yet, but we built this right side of the cup, and the important thing into year end is we tested this level and we pulled off, which I think that's important, because I don't think you're just going to blast through this level. you're going to run into resistance, you're extended, and then we're going to need to base this out. So I think that's what's happening with this stock right now is we're basing out. We pulled back in. We found support at the 10-week. So I got some on down in here. And we actually I was added to this today. Just, this morning before it kind of went, it kind of looked a little bit like a flag in here. So I put some on here. And really is what I'm looking for with this stock is I'm actually looking for this to build like a bigger handle, 48 to 50 area. And this will be a name that if we can push through this level, in the right way, if it's shown relative weakness as it does all this, maybe not, but this is a name that if we can push through this level, I'll have a pretty good sized position on, and I definitely think this thing could run, to 100. Now, with that said, we'll see what happens. I have no idea as to how it's going to play out, but that's the story. I like the story. I like the idea, like what's the market cap on this thing? Sorry, I look it up on my phone app. The market cap on this thing is $3.6 billion. If they can do like 1/10 of what they say they're going to do, this thing can be a $10, $20 billion company, like no problem. And it would still have a lot of potential runway. There's other things that go into that for me. Like, I don't think Africa, like they may be as affected by the pandemic, but their growth rate's massive. They're just kind of earlier in the development than some other countries. So, I think that this has a lot of potential tailwinds if they can deliver on some of what they say they can do. Let's see. You want to look at one more?
Yeah, sure. And I have a question before you go to another one. So it's interesting, as you look at these charts, you're looking at the monthly chart, the weekly chart, and the daily chart all together and seeing how they kind of mesh. So would you encourage other people to look at multiple timeframes to analyze the stock? And what would be like kind of a good resource to learn more about how to do that type of analysis?
So absolutely. I mean, I think like one of the biggest mistakes you can make is not like, if you're a day trader, you should be looking at the daily chart for sure, because, you can increase your odds of having success if you're executing on the 5-minute chart at an important daily level. And likewise, if you're a swing or position trader, like there are institutions that are not even looking at a chart lower than the weekly, I would imagine. So like, why wouldn't I look at that so that I can get a real frame of reference as to where I am? And I've become convinced if I pay more attention to the weekly, I can sell better on the daily. I'll know, hey, this looks good, but you know what? It's a little extended from the 10-week. It probably needs 2 more weeks. And you can kind of hopefully keep yourself from getting chopped up. Like that's one of my major goals, is in those chop markets to just chill out. And so I think you can help yourself in doing that by paying attention to higher time frames.
Yeah, absolutely. And it really clicked with me when you mentioned how you're looking to potentially sell when you're extended both from the 10-week and the 10-day, looking at both of those at the same time. That really makes sense to me.
Yeah, for sure.
All right. So do you want to look at one more?
Yeah, so let's see. I'll show you more of like a swing trade I made into year end. So BLNK is a stock that honestly I had this cup and handle drawn, well before I took the trade, and this was just such a beautiful pattern that it kind of stuck out to me. And a guy I trade with rocked this thing from like $8-10 to up in here, and I missed it. But once we had this move, I was like, this thing there's something going on here. I don't really know what it is, but I started paying attention to the stock more, started learning about the charging stations and things like that. And it made sense. It fit the EV theme. So I kind of had the theme at my back. And, then I got this pattern, and it held the 20-day. This like a new stock like this that's thin is not like the type of stock like I'm going to try to buy tight versus the 20-day. It's just, for me, it doesn't fit how I roll. But we made this, little channel, and I bought a little bit of this at like 24 at the close, and I added to it here. And then we made this little type of flag type pattern. And I actually at 27 and 28, I put more on here, and I got to a full position. And then I sold half here into the bell, and I sold the rest here on the open. And the reason that I did that is I had looked at this day and it looked just like this. So that's why I took some off. And then when we gapped down, my thought process was, okay, this is like this. So this trade's probably dead. And I booked it and it went a little higher, but you know, it was a great trade for me. And then actually I'm back in this stock right now. And kind of my reasoning was this 1 5-day reminded me of this day, 12/2. And then, you know, right in here, where is it? I don't know. I can't think right now. But basically here, when it went red to green on this gap down, I felt like it looked a lot like this day. And so I bought it, and they're doing an offering, which, you know, I think closed today or something. But if this handles out kind of like this did here, I'll add to this and see if we can catch another trade here. But that's more of like a swing trade for me. You know, these more like faster movers, call them more specky, if you will, type names, where like, you know, I'm not going to like go buy a Blink station the way I am a Peloton bike, you know. Those are the types of things I'll take a quicker trade and I'll just revisit it when it sets up. So that's an example of a swing trade I made.
And are you going smaller size on this, or is it still kind of that 20 to 30% range?
Yeah, so in this, like in here, I think I was like literally only like 7. And then I added here, I think I got it up to 15. So this one I did get up to about 25, but it's because of the way I was able to buy it. Like I was able to buy it here, then I was able to buy it here, then I was able to buy it here, and then it closed well, and I was able to buy a little more. So it's like I had 4 opportunities to buy the stock, which each of those opportunities I felt more confident the trade was going to work. So I felt like, one, I was buying up here, and when I'm buying up here, I'm moving my stop up, right? So I'm increasing my size, and I feel like I'm using the small amount of profits I have here to give myself the opportunity for, you know, a low risk, potential high upside trade. And fortunately, that's how it worked out. It doesn't always, though. Why, you know, if you're going to do that, you have to recognize you're potentially risking losing these gains to, you know, hopefully get more. So I did end up having pretty good size on this. Yeah, typically I would have about 12 to 15. The way I was able to buy this allowed me to have more size. Gotcha.
Awesome. Well, thanks so much, Oliver, for walking us through those charts and seeing how you analyze and enter a stock. I always end with this one question. So what are some motivating words you have for new traders who are just kind of picking this stuff up for the first time, maybe this year, and want to shorten their learning curves?
Yeah, I mean, I would just say read all those books, but don't avoid style drift. You know, find out what works for you and stick with it. And then, you know, I would say like find a mentor. Like for me, Tickermonkey and working with JT was great. But I think a lot of people try to like copy somebody's strategy. And I do think you need to trade and find out what works for you. Like I'm not going to hold back to the 50-period moving average. I'll sell at the 50-day on the low. Like that's what'll happen. It's happened. And so you have to figure out what works for you. And then I would just like become a part of a group or work with people where you've got guys with more experience, but more just so as you learn and you inevitably have some tough times, you know, you have people that can kind of motivate you and keep you going. Because I do believe that if you stick with it and if you're willing to admit your faults and kind of learn from your mistakes, that you're going to have success over time. So just keep at it, stay persistent, and don't give up.
That's great advice. Awesome. Thanks again, Oliver, for walking us through your process and everything. For everybody watching, I hope you guys enjoyed, and remember to leave a like down below and subscribe if you want to see more interviews just like this one. And we'll see you guys in future videos.
Thanks, Richard.
Thank you.